Kadena is looking like it's ready to explode 10x, but we are going to look at the high probability setup, how you can actually become a risk-free, minimize the downside, maximize the upside by looking at high probabilities and never certainties, the top traders' mindsets. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro, been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. So I'm listening to you all the time, the questions that you're coming up with, and I don't think people are getting me when I'm saying probabilities and never certainties. We're talking about probabilities and how to do it. So what we're going to do today is just do a quick recap. We did a video on January 13th, Kadena A, B, C of a wave 2, and we said we should expect a reversal. The price action was over here for a wave 4. The next video we did was 5 days later, and it said, look, the wave 4 seems to be holding, and we're moving towards a price time zone that we anticipated, ready for a potential 11x, right? $6 to around, I think it was $60, $66, thereabouts. Probabilities, never certainties. So today we're going to dive in a bit deeper. So what's happening right now that gives us probability, like high probability, right? First things first, weekly momentum. We're looking at a weekly chart. The momentum indicator, this is the one that I'm using, is in the oversold zone, saying that the reversal, we should be expecting sideways to up over the coming weeks on a macro time frame. So that's weekly momentum is looking to reverse sideways to up for the coming weeks. So that's weekly, right? That's the higher degree time frame. If you're not familiar with trading, there's few different time frames. I'm using weekly and daily. On the daily chart, the momentum has made a bullish reversal. That's what I said in the first video. I said we want to wait for the next daily bullish reversal to be in line with the higher degree wave count. So now the daily momentum is sideways to up. We should expect at least 3 to 7 days sideways to up. So now there's two things that's telling us we've got a dual momentum, weekly and daily, sideways to up. We've got pattern, so we said a wave 2, and an ABC of a wave 2, and a 1, 2, 3, 4, 5 of a C of a 2. What that means is there's 3 degrees of wave counts with Elliott wave, and these things tell us there's a higher probability that we're going to see the end of this trend, this trend, and get the reversal. If you're not familiar with Elliott wave counts and you want to learn the rules, the guidelines, and also the Fibonacci ratios, take my free Elliott wave and Fibonacci masterclass. I cover it in depth, it's detailed, but it's also in layman's terms so you get a real feel for the market. Then we've got price. We did these Fibonacci price zones over here. We did a retracement, a macro degree retracement. We said we're at the 78.6% retracement. That's a typical maximum zone of a wave 2. We did an ABC, alternate price projection. We did, I think we did an external retracement as well. And we also broke this down, end of a wave 5 of the wave C target. I know I just spoke Martian there, right? Martian, if you're not familiar with this stuff. But this pink box basically says, based on the psychology, mass herd psychology of buying and selling behavior, we are coming towards a very, very key support zone, and we often will see a reversal. Also, just to note, I drew a line here. It's also in the range of the previous wave 4. Often a correction will end in the range of the previous wave 4. So now we've got a few different things. And then we did some time as well. We did some time retracement, time alternate price projections that helped us draw this pink box. So we got 4 things that says we got high probability long trade setup. So we've got the trader's mindset here. We're looking at high probability. So once you've got this confluence of events, then the next job, and I want to break it down today because I don't think people get, because if you're not used to this stuff, then it's not going to be intuitive. Now we look for the high probability entry point, right? And it's probabilities, never certainties. So important, right? We need to be prepared to be wrong, but if we're wrong, we risk that much, and if we're right, we make that much, right? That's the whole idea. That's what we're looking to do when we're doing this. So Kadena is on a few exchanges. One of the exchanges on is Who.com is a big exchange. It's got plenty of volume, so it's going to be brilliant. So you go to Who.com or KuCoin or Gate.io. If you go to CoinMarketCap, click on Market, and it'll just tell you the list of exchanges. And what we're looking to do, I've just zoomed in. The exchange functions are pretty similar. Is we are now looking for an entry point, and one of the aggressive entry points is where we're trying to get in right near the bottom, but also have a stop loss quite tight. Is we can use something called a 1-bar high entry. Now that we've got the weekly momentum, daily momentum, pattern price, and time telling us we've got a potential reversal on our hands, we can say, right, if on the previous 1-bar high, the price exceeds it. So how I want you to think of this is, if the wind is against us, so as the price is falling, the wind is against us, so we don't want to buy. And then when there's the first signal that the wind's in our sell, which is on the upside, then we want to let the market enter us in. And just that one move will increase the probability of you making good returns and mitigating the risk, as opposed to just buying as the market's falling, trying to pick the bottom. No, we just do our analysis, say with the bottom is near, but we put an order in so the market reverses and enters us into the market. That one thing will increase the probability. But we still want to say, but the wind can still turn against us because the overall trend has been down. When trying to kind of get it right near the bottom. If it goes below the 1 bar low, then we put a sell order if we're wrong. So we say we want to buy if it's above $6, that's this 1 bar high. And we want to, if we get triggered into the order and then the market reverses, we want to sell. So then we have a particular risk and a risk ratio, and we can calculate that and say, look, we are willing to lose this amount of money if we're wrong, but if we're right, we're going to make this amount of money. So we risk this much to potentially make this much. That's the name of the game. That's trading. That's risk management. And we're going to break down the numbers. I'm going to break them down for you because I don't think people are getting it. So with this example, I thought, let me actually just put in the order. You can use something called trigger order. You have to put in two things. I'm not going to go into too much detail here. We're just going to do $1,000 worth of Kadena. That's the example we're going to use. And you just put in the order. So you can kind of zoom into this. Today is not about how to do this. I'm going to assume you know how to do some of this stuff, even though you might not. But the main lesson is probabilities. How do we get a probability in our favor? So here's the numbers. $1,000 USDT gives us at $6, 166 Kadena, right? KDA. If we're wrong, we would sell those 166 KDA at $4.45, right? If we get entered in and then the market reverses, that means we'll lose 261. In other words, if you pay $6 for Kadena and you get 166 and you end up selling them at $4.45 at a loss, you will lose on your initial purchase $261, right? That's the numbers. But here's our trade plan. You've heard me talk about trade plan, manage your positions, risk management, etc. So now we're going to break it down. I'm going to break it down for you, but this is applicable to all cryptos, all portfolios, all markets. It's just great practice. What we're going to say is, and I'm going to cover this on a live chart in a second, is sell half of your holdings of KDA at $10.74 or thereabouts, and we'll go into that in a bit more detail, which is the 50% retracement of the wave C that we've just seen, a 5-wave sequence. So in other words, what I'm asking myself is, Jagir, what is the minimum that should occur, high probability, if you're wrong? Okay, at that point, we want to take some money off the table, ideally become risk-free, and even guarantee some profit. So you can make profit when you're wrong, right? That's the key. That's the secret. That is the high level that most people don't understand. We don't need to risk too much. So if we manage to sell our 166 divided by 2, which is half, 83 tokens of KDA at $10.74, we will actually bag 891. So this is the business plan that I'm writing in advance. Move the sell order, the stop loss effectively, to risk-free. In other words, the sell order will be at $4.45. And when we exit our first point, we move it to $6. So even if the market goes against us and stops our second position out, we have still made $891, having just risked 261. That's what you call risk management. Risk management. So what's the plan? The business plan, for the second half, we want to hold for the bigger move. WD Gann said the big money's made in the big moves, and that's the wave 3 target, which is the 1.618 and the 2.618. And that target zone is $43 to $66. $43 to $66. Again, we'll jump into that in a second. So again, we've sold half. This is the plan. We're planning at the planning phase. So before you even enter your order, you want to have your plan set. Then we've got 83 tokens that we want to sell at $43 as the minimum. But again, we want to manage the trade as the market unfolds and make logical, objective decisions. That means 83 tokens at $43 will give you $3,500. So again, we're going to wait for the 1.618 price targets. We're going to give the market some space on the second position. We're going to ideally see a 5-wave structure for a wave 3 that will let us kind of really sell towards the top of a wave 3, potential wave 3, and allow the weekly momentum to get into the overbought zone. Currently, it's in the oversold zone. So 2, 3, 4, 5, 6 weeks, let it go sideways to up if it moves in our direction. So we're risking $261. First exit 891 will be bagged. We'll move our second position to a risk-free. So therefore, we're guaranteeing a 3.4x based on our initial risk. In terms of risking 261 times 3.4 gives us 891. Now, if you've got a bigger portfolio, you do bigger numbers. If you've got a smaller portfolio, we've got smaller numbers. Second exit is if we successfully exit at 3.618. We don't know the information yet. We're just putting the rough business plan together at high level. That means we're going to make a potential 4,460 risk reward. Basically, it means a 17x. What do I mean by that? It means we're potentially going to make 4,460. If it goes our way, minimum that we're expecting is 891 if we get risk free, but we are risking, and there is a potential of losing this amount, $261. That's the numbers, that's the thinking, that's the logic. So with an 8,700 starting account, you would risk 3%. So 3%, I basically did it the reverse just to kind of give you the logic. We are risking 3% to make 51% of your whole portfolio, meaning 261 divided by 0.03 equals 8,700. What, Jagir? What? I'm not a mathematician. What did you just say there? Okay, if you had a portfolio size of 8,700 and you risk 3%, this would allow you, with this particular setup, each position is different. Each position is almost like a separate mini business plan, would allow you to buy $1,000 worth of Kadena and have your stop loss at $4.45 and risk 261. 261 of 8,700 is 3%, right? So you're risking 3% to make a potential 51% of your portfolio. What do I mean by that? 51% is 4,460 is 51% of 8,700. So you shouldn't be risking your whole portfolio. This is the trader's mindset, risking a little to make a lot and doing it consistently, knowing there are going to be times, maybe 30, 40, 50, 60% of the time, you're going to get stopped out. But when you get stopped out, you lose 261%. And then the 20, 30, 40, 50% of the time, when the market moves in your direction, you're going to make 4,460. Right? So how you're thinking about it logically is when you're wrong, you're either going to break even, you're going to make a small profit, or you're going to take a small loss. And when you're right, you make a 10 to 17x, right? So that's the math, that's the logic. All right, so what we're going to jump into a live chart. This was covered in the last video. We said, look, Kadena looks like a nice 1, 2, 3, 4, 5, A, B, C, a 1, 2, 3, 4, 5 of a wave 2. We got weekly momentum, daily momentum, we got pattern, we got price, and we got time, all in our favor. So then we're looking for a high probability setup. We're going to zoom in and say, okay, look, this is where the market is right now. We can put in an order at the 1 bar high and a stop loss at the 1 bar low. But here I'm covering the high level logical thinking, because I read your comments and I go, I don't know if people are understanding the basics of probabilities, right? How do you get the probability in your favor? So now we're going to jump into a live chart. And if you haven't learned the basics of momentum indicators, Fibonacci, Elliott wave, take my free Elliott wave Fibonacci masterclass. I have a course at the end of the masterclass. If you like the vibe and the feel of the masterclass, give away a lot of value. There's a course at the end. It's cheap as chips, but it's going to give you the foundation of Elliott wave and Fibonacci, and also the momentum indicators, so you can do what we're talking about here. Because it's not necessarily easy, but everything is difficult before it's easy. So let's dive to a live chart. So we're going to go to Kadena. All right, so here's Kadena as a live chart. All right, so we're going to now zoom in. Right, zoom in. If you want to see the full analysis of how we got to this conclusion, I did it in the last 2 Kadena videos. I think it was the 13th and the 18th. But what we're going to focus on now is 2 things, right? First of all, we're going to move to a candlestick chart, right? So in the top left, we're on a line chart, closing day data. We're going to move to a candle. Why? It's just easier to see the bars, And what we've done here basically is we've basically said here, we've put in a buy order. Use whichever exchange you used. I've used Who exchange. Buy order at $6. The actual order is just above $6. I've actually put it in 6.01, which is just to make sure the wind is in our favor. And then the stop loss, or the sell order, also known as a stop loss, will go at $4.45. So I was supposed to copy and paste first. Let me just do that. Let me do that. Okay, let me just do it like this. All right, let me just put this here. It helps if I copy paste first. And let me just do that again. By order. Now, it's important you do this as an order, if possible, because then the market is entering you into the trade. It is bad practice to press buy, just buy. Why? Because it's emotional, and people's we operate 95% emotionally as human beings, and therefore we're more subject to making mistakes. Whereas if you put in the order and it's triggered when you're not there, then you can just look at the market once a day, half an hour a day. You don't need to be constantly looking at the price. It's very, very important. So not buy order, we want buy order, buy order. $6. We said, right? $6. I've put it at just 1 cent over $6. All right, there you go. Right. So now what we can do is manage our trade. So we haven't been triggered yet. You can see this order. Again, you have to put the order in on an exchange if you're not used to it. We're using who.com as the example. And by the way, if I just jump into Kadena is $5.64. If you click on market on CoinMarketCap, it just gives you the list of the exchanges. Who is one of them. Who tends to have a lot of the cryptos, so it's quite easy to use as well. So what we're looking for is the market to take us into this trade, and then we ask ourselves the question: why is the sell order or the stop loss at this 1 bar low, Jagir? Well, what is the thing that should occur that invalidates our wave count? Well, the thing that will invalidate the wave count is that the price goes below what we're calling a potential wave 5 of a C over 2, or wave 2. Let's keep it simple, right? If the price goes below that, right, we don't want to be in the market. We just wait for the next order. All right, so what we want to do now to finish up is the first exit and the second exit logic. So when we're looking at this market, all right, it's not good practice to think, all right, everything looks perfect, and therefore Kadena is going to do this, right? Because a lot of people, amateurs, do this. They just look at this one case and go, right, this is what I'm expecting for Kadena, $66. Jagir said so. I know he said probabilities are never certainty, so I'm just going to buy now and hold until it hits 66. That's bad practice. Bad. Naughty. No, we don't want that. What we want to do is the reverse. This is what we do, right? We have that as what we're anticipating. That's our thesis. That's our thinking. That's the potential. But we want to ask the question: what is the minimum that should occur if we are wrong, right? And it's okay to be wrong. In fact, you should anticipate you're wrong. Think you are wrong. Why? Because this 5-wave structure to the downside, called wave C, has broken down into a pretty clean 5-wave structure, right? And what should follow as a minimum after a 5-wave structure? Well, it's a 3-wave structure, which is called a correction, an ABC correction. What's the typical minimum level of a correction? Well, if we measure it, we should know by now, if you've been watching my stuff, the typical minimum correction should be 50%. And now you'll see why I said $10.74 or thereabouts in the slide. I said this is the minimum that we should expect, right? How long should that correction take? If it's a correction, right? So we want to assume that the market's not going to do what we're expecting. You go, yeah, but the analysis looks on point. The weekly momentum, the daily momentum, the pattern, everything's lining up. I go, yeah, I know, but it's probabilities and never certainties. So what we can do is we do the 50% to 100% retracement on time. We've got price. So we're saying over the next few days, by 4th of February, so next 10 days, we should anticipate sideways to up. Minimum, because at the first wave up, if we do get a trend reversal, we don't know if that's a wave A or a wave 1, and then we'll typically get a movement to the downside, a correction to the first move to the upside. Again, we just have to go with this, right? And then a third wave, right? And this third wave, when it gets into this zone, if it pans out, if its probabilities never certainties, we want to assume this is a correction, right? Even though the probability states otherwise, we want to mitigate against losing money. We don't want to lose money. So here is where we're talking about making that initial $891, right? So if we take that, let's just say the price did do this, we go, great, we exit half, or whatever your trade plan is, you have to make sure it fits you. And then this sell order, you literally move to where the buy order is. Literally move up here, they'll overlap each other. So now in the worst case scenario, right, if it pans out this way, is you are now risk-free because you've taken some profit and you move your stop loss to break even, and now it's impossible for you to lose money, right? You've made your money back in your pocket. Stop loss order is there. You can't lose money. Now on your second position. Oh, by the way, just for your reference, this is a highly advanced entry strategy on a one bar high, and we're being very precise here. We're using a weekly, daily chart, and everything else. If your risk tolerance is a bit lower or your skill level is lower and you're not at that level yet, what you can do is wait for the reversal and then wait for the first pullback against the trend, and then you can look to enter here. That's another good entry point. Or if you miss this entry point, right, and you like Kadena, everything's lining up, and the market moves up, and you go, oh shoot, I missed it. You just wait for the first pullback. Typically, it happens in an ABC structure, and then you just literally apply the exact same methodology on this low over here when you go high, right? So that's phase one of the business plan. That's risk management. If we're wrong, if the market does do that and then does this, because it could turn into a complex correction, we want to be aware of that. Bitcoin is, not bullish right now, right? It's doing a similar pattern like this, but on a macro scale for what we're looking at as a wave 4. But we want to know that this is a potential outcome. We could get a move up and then down. When you look at something like CKB, Nervos Network, we're not going to do analysis on Nervos Network, but it did a classic complex correction. I'm just going to show it to you like this because it's important, because it's a potential outcome. Let me just click on all. This is a good example. I'm just going to pull up the data to this point here and this point here. I will do another update on Nervous Network, but here, what I just wanted to show you is this potential outcome that can happen. This is why we do risk-free. We had this move to the upside, which we'll call a wave 1, and then we had this a very clean A, B, C. Now, at this point, we would have made the assessment that this looks like a wave 2 low, right? There was no reason to think otherwise at this point in time, and we would have looked to gone long. We would have gone long, and it was a nice A, B, C. But at the time, even if I do it like this, if I do it like this, let me just do that again. This is important because I don't really care that it's Kadena or if it's CKB or if it's Ethereum or Bitcoin. The methodology is the most important thing here. It's the wave count, the structure, the becoming risk-free. Wave 1 will look like an A, B, C of a wave 2. I would have thought this is a wave 2 low, high probability, very similar to what we're seeing with Kadena right now. And then we've got this initial 3-wave move to the upside. And at this point, there's 2 outcomes. One, this is a microwave 1, 2, and then we're forming a 3. Or it's an A, B, C. Now, even though the probability states after a wave 2, we should anticipate a wave 3 to the upside. That's what the probability is. We want to mitigate and say, look, there is a possibility that this could be an ABC correction and we could see a complex correction, right? That we don't. So that's why we take profits here. That's why we move our stop loss from here to entry point over here. So in Kadena's case, we're saying we're gonna bag with, in this scenario example that I'm using, 891. So if the market does do this, the worst case scenario is we made $891 gross. We go, all right, when you're wrong, you make $891. When you're right, you make, $5,000. That's the thinking. So then with Nervos Network, we know what happened because we got the data. It did go on to make a complex correction, right? And then when it does do a complex correction like this, well, you go, well, what do you do now, Jagir? What do you do now? I go, well, does the trade still hold? I go, yeah. So then literally, and I did this in videos a while ago, but this may happen. I want to show you this because people just think when they see this wave 2, they just get it in their minds that this is going to happen. They get cognitive dissonance. They think they just miss all the information because they're just like this, right? I'm going to get rich tomorrow. I'm going to put in all my money into this because this is going to happen. I go, that's bad practice. That's not what the winners do. Winners go, that's what the thesis is. But at this point, this is the minimum that we expect. Take profits, become risk-free. And in this case, it did happen like this. And as the wave came down here, then this looks like an A, B, C, D, E complex correction. bit more advanced to understand that. But then this looks like a wave two, and then you do the same thing. You go my entry point, my stop loss, and so on and so forth. And then with CKB in this case, it did take off, right? But over here, again, we would have done the same thing. Again, I'm going to jump back into Kadena in a second, but this is important. Take profits, become risk free, move your stop loss to break even, right? So we know that. And then our next position, we are anticipating the market to break the all-time new, the previous high. I can't remember if it did or it didn't. But then we have to look at the weekly and the daily momentum. And if it doesn't, but it really takes off, we have to make business decisions based on the information at hand. And then this, it took off to around there. And then at this point, what I would have personally done, I didn't trade CKB. I was just doing it because a lot of people were asking me to do it. I'll say this looks like a wave one, looks like a wave two, and it looks like a 1, 2, 3, 4, 5 of a wave three. It hasn't exceeded this top, but if the weekly momentum became overbought, I go, well, there's no point in me holding for a wave four correction. I would look to take my profits here and then reevaluate the market as the data unfolds. And then as the data unfolds, we can see it's done a really deep correction. It's kind of gone a little bit into that range, and now it's gone definitely into that range. So then I'll go, okay, now we can reevaluate. So a little quick thing with CKB, my now analysis here, it looks more like a 1, 2, 3, 4, 5 of a wave 1 of a wave 3. And I go, now this looks like A, B, C of a wave 2 of a wave 3. And now we should anticipate a bullish movement to the upside where we can have another order in this range. Again, we need to go into a bit more detail, but that's the thinking. So now we've got that example and that case study. Can we use that information when we come into Kadena? That's the reason why. So let's just say it does go in our favor, right? We're risk-free and everything else. Where are the two targets? And that's where we're going to wrap up. Right, we'll go back to our line chart because now we've got everything in play. We've got our orders set. Line charts is a bit cleaner. Let's just delete these lines over here. Let's just delete these now. And let's just say, let's just get rid of all this now. That's all fine. And then we go, where's our next target? Well, the next target simply is for the second position or the third position, depending on your trade strategy. But you have this set in advance. You don't try and figure this out as the market's unfolding. We measure this wave one, project it forward from this wave two low, and add 0.618, which gives us 1.618, which is this. This is the 1.618. This is where we got $43 from. A lot of cryptos tend to overextend to the 2.618, and then that's this one here. But what do we do? Well, when we jump into a weekly chart, and I want to do this because I just don't think people are getting it when I'm listening to the questions. We want to see, is the weekly momentum, is it bullish? And when it starts reaching into this oversold zone, this gives us a big clue. It says the upside movement should be limited, right? And then when it gets into that zone, if we're getting a momentum, two momentum indicators saying it's overbought, and then we're getting a reversal. If there's a 5-wave sequence of a pattern, if we're at the 1.6, 2.618 Fibonacci price, and there's also some time zones that we can do, that's telling us that there's a higher probability that we're reaching a top. Then what you do is this, and that's what we're going to finish on today. And let me know in the comments below how you're finding this, because I'm trying to give you what you want, right? A lot of coins I cover is because you asked for them. And I'm just doing the technical, non-biased, objective analysis so you can kind of see how you can get the probabilities in your favor. So yeah, any feedback is appreciated. So here we're looking for what we're saying is a wave 1, 2, might be 3, 4, 5, something like this. And I'm just going to draw it like this. And as the market unfolds, you're going to have to make decisions, but you want to make those decisions ahead of time. And what we can do is that key ratios, I'm not going to cover it today, but you can move your stop loss. I'll cover one thing. For instance, if and when the market if it does this and then moves back and then starts moving up like this, there's no reason to have your stop loss down here. We can actually move it to this wave 2 low, right? We can move it to the wave 2 low, and that's effectively bagging more profits, right? So if the market does end up reversing, now made some extra profit. if the market does make a wave 3 and a wave 4 and is forming a wave 5, well, guess what? You can now move your stop loss. This is like high level thinking to the wave 4 low, right? Because if we've made this new high, well, if it goes below this, that's going to indicate that the trend is over, and then we should get a wave 4 correction. And then as the market unfolds and it's getting towards a particular target, let's just do it like this. I'll do it like this. I would personally, if I saw this market unfold like this, I would do an end of wave 5 target. I would measure wave 1 to 3, project it from the wave 4 low, and the most common and typical is 62 to 100%. The 100% is slightly off the screen, right, which is this zone here. I would draw a box in advance and go, this is the data where I want to be very hyper aware that we're coming towards an end of a trend. So the trend is your friend, ride it until its end, until it reaches its bend. Well, we can project in advance, like you see me do, that is likely to reach a top here. So when we're using candlesticks, literally you then trail, rather than going swing low and swing low, you trail your stop loss nearer the zone on the 1 bar low, right? Every day, once a day, there's a new bar that's formed. Yeah, once the day closes, you just move the stop loss or the sell order to the next 1 bar low, to the next 1 bar low. Why? Why not just press sell? Jagir, I'm in great profits, Jagir. Why don't you just press sell? Because what happens is sometimes in some markets, all of a sudden, this happens. Bang. I don't know. You've seen it time and time again. We saw it even with Kadena itself earlier this year, right? In fact, let's go back to that data, right? Let's use this as the example. In fact, let's use this as the example because this is so important. This is the perfect example, in fact, right? We're just. I'm gonna do it like this. Let me take the data to here, right? Right. So we're backdating the data with Kadena, but this is important, right? So let's just say we saw this wave 2 because it's very similar if you think about it, right? Very similar, right? We've got this movement to the upside. Look at this, right? So we're taking the dates just so you're familiar with the date. This is July 30th as an example, but we need to have the information before the price movement occurs, right? Because you can't make money on the history. You have to make it like literally as it's happening. So what we say is, let's just say we saw this move here, right? There's wave 1, wave 2, wave 3, wave 4, wave 5. And we've got this ABC correction. It's not that deep, right? But let's just say we saw this structure, and at the time, let's just do it like this. I'm going to do it like this. Right, we looked at this and went, this is not very deep, but it's an ABC structure. So we're going to put in an order to say, if it goes above this swing high, we're going to go long, as in buy. And if it goes below this swing low, that's where our stop loss is, right? Let's just say that was our thinking. And then the next day, we know the information. Can we get this? Where's the data? Oh, sorry. Let me just take the data back. Let me just go back to here. September 2021. I'm going to do it like this. Bear with me. September 2021. Right, I just want to take the data here. Replay tool. We're going to take it here. Obviously, we know what happened, but I'm just going to give you the reason why we do a 1 bar low and what it looks like. Right, so now let's just say the price triggers us in. We're in the order right now. We go, great. Yeah, we're happy. And now we're going to do a price projection, right? We go, this is our wave 1 and this is our wave 2. Well, typically after a wave 1, wave 2, we anticipate a 1.618, right? We measure this wave 1. We project it forward from this wave 2 low. And what we're anticipating, there's a few other factors. I'm just going to, this is more for our second position that I'm focused on. 1.618 to 2.618, right? So we got these two ranges, right? Like this. And then where we go, wow, all right, hit our targets. Great, we should be risk-free. That would be in our plan. And then let's just say you did, let's say we fully exited, right? We fully exited and everything's still set up. We made some good profits at the 2.618. Good profits from down here. We rode that wave as a wave 3, and let's just say let's say our stop loss is now on this swing low. I don't know if it gets taken out. There's a particular lesson I want to give you here. Okay, it doesn't, right? Let's just say it doesn't stop us out, right? It doesn't stop us out, right? We go, great. The market's still going up. It looks like it's forming its fifth wave. So now what we're going to do is we're going to make a fifth wave, end of wave target, right? What we're going to do is very, very simple. Especially if you're taking my Fibonacci Elliott wave masterclass and courses, I cover this. But we're going to measure wave 1, the beginning of wave 1 to wave 3, and we're going to project it forward from the low of wave 4. And what that does for us is it gives us some very particular ratios. We're going to use it here, and we're going to project it down from here. And the key two ratios for an end of wave 5 target doesn't mean this is where it's going to stop, but this is the point that I'm making. 61.8 as 0.618 to 100% of what we just measured. We projected that forward. What does that look like? Right? It gives us these two ranges over here. These are the two typical zones of a wave 5, right? And the reason you do a 1 bar low, because we know in this particular example, it shot right the way through this, right? We go bang. So we're now in our zone, right? So you have a choice to make. You go, oh, Jagir, shall I just sell? We've hit our wave 5. We're going to hit a wave 5 high. It could correct very fast. Do we sell? I go, no, well, stop loss is here. So, that's fine. But now what we can do is go to a candlestick. Let's just look at the momentum. The momentum is overbought on the daily chart, right? So now what we say is we've reached our price zone. The momentum is overbought. We're in the pattern of wave 5. So there's a few things telling us we should be coming towards an end of a trend. So now what we do is we take the stop loss, and there's a few ways of doing it. When you're at the extreme, you literally then go, right, I'm just going to put it on a 1 bar low, right? 1 bar low. And then the next bar is a big bar up. We go, oh, we've shot past. Let's just delete these. We've shot past now our wave 5 target. In fact, let me just keep those. Let me keep this one. Let me just delete this number here. We don't need this number. We've smashed through the 100%, right? We go, oh, wow, okay. So what do I do now, Jagir? I'm like, is up. We was expecting it to go to $10, $11. It's now at $14. What do we do now? I go, we don't think. What do you mean you don't think? I go, it should be set in your business plan. What did your business plan say? Oh, my business plan says move your stop loss order to the 1 bar low. I go, yeah. I mean, you can go to an hourly chart and do something a bit more precise. You go, all right, so that means now if the price reverses and does that, your exit point is now here, the 1 bar low. And you might be thinking, yeah, but we're just giving all that back to the market. But what the information that we don't have right now is this going to be the high? We don't know. So we go with the probability. So we let the market tell us. Let the market take us out. Let the sell the winds to reverse and push the boat back. And when it pushes the boat back, that's when we exit. And what this allows you to do is stay very mechanical, very objective, very non-emotional. So now the next day comes up and it goes, oh, yeah, this thing's not stopping. What do I do now? What does your business plan say? It goes, move it to the 1 bar low, right? So this is your stop loss order. And you can set this, like in a Who exchange, you can just update the numbers once a day. You can have it set in your diary, 1 bar low. Now my stop loss order is in 14. But the price is $19. Like, surely it's not going to go higher than that. Surely it's not. Surely it's just going to reverse. I go, well, I don't know. You don't know. No one knows, right? Well, we've definitely shot past our wave 5. So we're keeping our stop loss very close to the market now. Next day, we got a red bar, but we haven't taken out the 1 bar low. So you just put it there. And then you go, bang, right? We got a green bar. You haven't taken out the 1 bar low, so you just put it there. And then it takes off again. You go, okay, what do I do? Objective, mechanical, non-emotional. And now, obviously, we know this wave 5 high is coming because we've drawn it over here. And we know the wave 1 is in this zone because we've drawn it here. But look, it went up again. So you go 1 bar low. And then you go, bang! That's your exit point. That's your exit point. You didn't have to press the sell button because your order's in play. Bang! There you go. Bob's your uncle. That's your exit point. And now, what we've managed to do in this example is we managed to peg the bottom at this wave 2 low and get almost all. We would have exited half of a position around here. There's a few different ways of thinking about it, but we're covering it. It's a bit easier now because we're getting a wave 2 on the other side. But we've got this movement to the upside. And normally, this is what we expect for a wave 5. But the panic buying in crypto is real. And then just went bump, 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 exit here. So you've now got literally all this movement to the upside. Like if we did the numbers would be phenomenal, like phenomenal, right? But let's just the main premise here was how do you manage your position non-emotionally? Well, I just gave you a very practical methodology of doing so. And then, well, we know what happened next. We know that the market reversed. And let's just move the arrow to here like this. So we got entry, exit, and then the market just went right the way down. Now, a lot of people would have held on, right? And like, gee, I don't know what to do. I don't know what to do. And then they'll see this movement to the upside coming up there, and I go, oh, it's gonna take off again. I just hold with no plan. That's why most people give money back to the markets. And now all of a sudden we're all the way down here, right? But now what we're doing today, on what's the date today? Today is the 23rd of Jan, 2022. We are now planning in advance. We don't know what's going to happen. That's why we say probabilities and never certainties. So this is, I'm hoping this is making perfect sense. I'm hoping, because I'm reading comments and I'm like, people are not getting it. Let me just delete this. But now I'm going to wrap up. All right. So now we are looking at the market. We just did a backdated example, but now we're looking at the market ahead of time. We got our order in play. Yeah, we've covered that. We got our sell order in play, as in if we get triggered in, we put the sell order in. Different platforms have slightly different functionality. We got our exit one zone here, which is the minimum that should occur, like we saw with CKB. We've got that now, that reference. But then if the market takes off, we give it space, we give it room, let it breathe. Let it breathe. Don't kind of cloud it. Just let it breathe and stand back. And we just put our stop losses at the swing lows. And then when we come to a high probability end of wave 5 target, ideally it's going to be an end of wave 5 over wave 3. If we come towards that target, then we do what we just said, because we don't know, because often there's panic buying. We just trail. And if it overextends, we just trail. If it reverses, bam, then we've captured most of the movement. Woo! There you go. That was like a masterclass and a half in itself with Kadena, entry to exit. We waited patiently from the 13th of January. We said Kadena is looking like it's making a wave 5 of a wave C of a wave 2, right? 3 degrees of count. We said we should anticipate around the $6 mark, and it went past the $6 mark into the $5 range, and now it's ranging. But we've had the weekly momentum bullish reversal. We are getting the daily bullish reversal, so we got momentum, 2 degrees. We got pattern, yeah, we know that. We got price, and we got some time analysis. Now we got our entry order, but we've also got our risk-free point at 50%, and we also got our stop loss, so we know that. And then we also got a business plan thesis ahead of time. The trade has not been triggered, but we've got the full plan in play. So once you're triggered, there should be no more thinking. It's all mechanical. You go, if this happens, if the 50% retracement happens, bang, the order goes in. But again, we don't just sell, we just one bar low again, right? One bar low, because it could overextend. Like we saw that with Solana. Like when it took off, it didn't really do a pullback. When from $26 when we did that analysis in June, August, it just flew up. So we just trade it, we trail it. And then if it does go towards the 1.618, $43, $44 range, and we still got the position, then we go, right, now we're waiting for the 5-way structure, choose the point, and we just go, show the stop loss, bang, exit, rinse, repeat. How did you find that, my friends? Because that was high level. Even because I was doing it this morning, and I'm thinking, how can I add more value to you? Do I need to make the video shorter? Is it more entry exit points? Because a lot of people are covering a lot of coins, but I'm going, are people making money? Are you managing to hold those profits? Are you managing to exit and become risk free? All right. So let's like, subscribe, hit the bell notification, take my free masterclass. Like literally, I'm telling you, it's high probability stuff. So today's quote, really, really relevant. I've chosen Mr. Warren Buffett. Rule number 1, never lose money. And now you have a methodology, a strategy, a thinking system that allows you to minimize the chances of you losing money. Because it's all well and good and say never lose money. And we go, yeah, but how, Jagir? If I buy Bitcoin and it's so volatile and I have no plan, no one's ever taught me before, and it's doing what it's doing, how am I supposed to not lose money? And then rule number 2 is never forget rule number 1. But now today we made that rule practical. Rule number 1, never lose money. Rule number 2, never forget rule number 1. So how do you not lose money or minimize the chance of you losing money overall. There's gonna be times you can take losses, right? That's just the name of the game. It's a part of doing business. It's the cost of doing business in this world. In this world, it's natural, it's healthy, just part of the game. If you can't take a loss, then you can't win. You can't win. Yeah. It's part of the game. But what you do is you go risk free. I'm risking this much to make this much. If it does this, then I'll do this, and just plan your trades in advance. Free masterclass. Buy my course. You get invite to my private Telegram. We're doing workshops on the weekend, and I'm looking to do more workshops because I'm realizing more and more this is not common information. And if you have this information, you can just increase your edge, which is the probability of you winning. Like, subscribe, hit the bell, and I'll see you soon.